Welcome to Markets Now. I'm Michelle Rook with Scott Barlick of Coima Barlick, and we did see a mixed day in the grains with corn and soybeans, higher wheat lower. Over in the livestock, cattle futures seeing some pressure. We ended mixed in the hogs. All right, let's start off talking about soybeans, Scott. The last time you and I visited, we were talking about some downside risk to soybeans, and we did see that with new contract lows. So you nailed that. So today's recovery, just technical in nature, you think?
Thank you for having me. Maybe I just got to say, hey, I was right once. Let's just wrap this up right now. But I mean, it just looks to me, soybeans, we're in that sideways range with real no hope for upside. We're looking at the moisture in South America, adequate rains over this last weekend, record crop coming. They've got their foot on the gas pedal. They plant more acres every single year. They're doing a better job. They're the top dog in the soybean market. So we have to expect moves like this when they're getting moisture like that. So that's what probably picked it up to the downside for number one. We've got a strong dollar as well, and entering into a new administration where we could be seeing some tariff wars and with some of our main customers in the bullseye for some of those tariffs. So uphill sledding there. I think this little recovery we've had, it just was probably too fast of a break. I mean, I think it could have maybe drifted, but when you were going to go that sharply lower for 3 days, you almost, even the guys that are bearish, like I was, you're even stopping the selling at that low price because it went down too fast. So just a little bit of recovery from that, and then we'll kind of take our breath. But there still is risk for it to move lower. There still is risk for it to go below $9. Moving ahead, we'll be watching the rains, watching the dollar, watching the trade wars. All of those things could push it even lower yet.
The other problem has been that we're scoring or had scored new contract lows in both soybean meal and soybean oil. And so the products have been a drag here, especially soybean oil recently, right?
Yeah, products that you would think maybe would find a little bottom here. But, even soy oil, it wasn't that long ago. We thought maybe there was some recovery coming, but took it away just as quickly as you got it. And so not aiding in any of it. I mean, if we start going sub 40, that's just going to be that much more pressure.
So the corn market has not been beat up as hard technically as the soybean market. But what are your thoughts about, corn? Did it just try to follow soybeans, or was it trading its own fundamentals on Thursday?
I feel like corn's been, kind of doing its own individual thing. I mean, you had the soybeans, after their large break, the corn, stayed pretty strong. I really didn't feel that bad about it. I think the demand is just that good. We found our end users. They're happy with it here. They're willing to go long and buy some. So seeing some pretty good movement on the corn, in my opinion. So I think that's what's been able to hold it. So now that the beans are recovering, corn, I mean, maybe it was a little aware of the beans breaking, but kind of doing its own thing. I think the long-term risk for corn versus soybeans is, this is the time of year we've all got our seed needs kind of purchased. We're looking into next year. There just seems to be a lot of chatter happening, especially after that last soybean break, that we're going to see a big increase in corn acres next year. It's way too early for an acreage battle, but that looks to be something that could be for the future. So if I'm a farmer, I need some long-term protection. I'm going to plant, an extra amount of corn next year. It's not too early to start to think about some of that stuff and look at some protection in kind of that category.
Yeah, no doubt. And Scott, we have seen short soybean, long corn spreads as a result of that thought, don't you think?
Yeah, I think so. And you didn't get a lot of movement out of the corn, but yes, the beans and the corn, I think those spreads are going to start to get highlighted just a little bit more. We really haven't talked about it because they're, we've been sideways in these markets for so long, but that is something that you're going to start to look at. And I think a lot of these grain spreads, you're seeing some of these bull spreads really kind of change and shift. So those are all going to get highlighted here as soon as we start the year, because there's some stories to be told in those.
Yeah. Do you think corn can hold up longer term if wheat and soybeans are both going the opposite direction? Is it too much of a drag?
No, for sure. I mean, you just think if those two had any kind of life in them, the soybeans and the wheat, what corn could actually do. We saw our ending stock number cut. We're seeing yes, demand is good. I mean, I feel like it might have had a little bit more life to try to challenge, hey, let's see what this north side of 450 looks like. And it probably can't quite do that move alone. But I guess we can be happy enough that it held right here, just south of the 450 number. But if we get the other two markets just to act a little bit tougher, I think corn could, make a little bit more of a move from here.
Absolutely. So cattle market down on Thursday. From a futures perspective, the charts look a little beat up. So do you think this is topping action there?
Yeah, it's been a little bit of an erratic week here. We've had a pretty good break in the futures, not so much led by some of the fundamental news, but you had a Wednesday afternoon. We're already trading on the weaker side of cattle, and a Wednesday afternoon, you see the stock market just absolutely erode, and watching the Dow Jones drop 100 points every 30 seconds with, kind of breathtaking. I mean, you're just watching it, and it settles 1140 lower. So some of that stock market uncertainty that we saw with what came out of the Fed notes and the 0.25% break, it added just a little bit of an extra worry to the cattle market, saying, okay, maybe everything's not all roses. And so I think we had to pencil a little bit of that in Thursday. I think that's part of the break that we saw. In my opinion, but the cash is holding on strong, and maybe that's what's going to be the savior yet again.
Yeah. Meanwhile, the cash news has been good. What have we heard so far?
The North is still trading quite premium to the futures. We're looking at the 195. There has been some pass. There has been some trade. There's also been some 196. Have a couple different regionals that have been out there with 196. So those are all good signs. Packers are after cattle. The sale barns were hot again, is what I heard in the live cattle, all of those prices. And feeders have not hardly taken a breath. Even with this kind of break and extra worry, those prices are maintaining some pretty strong levels, and you're looking to say, hey, maybe I can find a little buy here on some of these feeders. And you're looking at this very same as what I was looking at them last week as well. And starting to say, hey, I can't really find 800 pounders. I really can't find the 900 pounders. So I think we're still looking at tight supply. Optimism is still there. So loving what I'm hearing on the cash side. And I think that's what's going to kind of hold this market, even though we've got all this chart damage and some of these other worries. If we can just kind of get some of those behind us and trade this cash news again, I think we're going to be okay.
Yeah, and then we're going into a cattle on feed report. Sometimes we get some squaring ahead of that, although placements are expected to be down pretty sharply from a year ago, aren't they?
Yep. The placement number is probably what we're looking at the most, or at least what everybody's talking about. And, we've got the Mexican border shut. So that's going to affect the last week of November, not the full month or anything like that. So there's some expectations of that number being lower and maybe then quite lower moving forward here for a little bit. We know that border is going to open again. I mean, that's going to happen. So I don't feel like it's going to be a surprise. Expectations are after the first of the year, we're going to have the protocol in place and we can move on with that. So hopefully that's being priced into the market here, and we don't have to trade it lower again once we find out. But so the placements is the key. What numbers are out there? What numbers are coming? What are we putting on feed? These cash feeder prices would tell me, as high as they're paying, that we should probably expect some lower placements coming up on these reports here.
And we should just mention quickly, demand still holding in strong. Choice boxes up $6.80 on the noon report here today.
Yeah, that never hurts. Not a big fan of following boxed beef prices, but that's a big move for just a day. I think we've noticed big movement in the high quality cuts for Christmas. There was a nice last minute push to try to get some of that on the shelves. So the demand hung in there really well. I think after this Christmas season, we'll maybe get a truer test of what it actually is, after we get past the Christmas season. So, and I don't know if we have to be worried about that or not, but it does feel like the overall economy news. And if we start to see some more of that volatility over there, that probably wouldn't help.
And hogs ended mixed today. And of course, you and I have talked about the fact that it looks like maybe the top is in at least, because the funds are now starting to shed a little bit of their length. But do they shed too much here, considering we have lean hog index has been holding together pretty good, and we do have a lot of disease issues out there in the country?
Yeah, I think that's the biggest thing I'm hearing. We saw some of the liquidation and we thought, okay, this is probably the big one. This is going to be the break that's going to happen. And the thing that probably rebounded it was some of this PRRS talk and the disease issues that are around, and it's notable. I mean, I'm hearing it more than just a few times. So I think that's probably pumping just a little bit of premium back into the market. I think, one of the other highlights on the demand side is if we start to see some tariff wars against Mexico and China, some of our biggest hog customers, we're going to have a lot of pork to eat domestically here, because that's a market that does ship large amounts of pork overseas. So could be some demand issues. I mean, those are kind of some of the reasons I think the market doesn't have to go crazy, but PRRS is probably what at least rebounded it somewhat.
All right. Thanks so much, Scott. Scott Varlick with Quima Varlick. That is Markets Now.